Okay, so let's get going here this morning. So let's first of all, we had a productive day again yesterday. Let's look at the levels I put up yesterday, though. The reason why we put up our market profile levels, we look at the previous market participants. So this is yesterday on October 8th. Today is October 9th. So what I like to do is I'd like to look at yesterday's profile to find this morning's or to find today's target areas and support and resistance areas, because these levels are all the market participants in the entire market. So this is the entire participation in the market. And what it does, it lets us know where key support and resistance is. So I drew this line in yesterday at 8:30. I mean, when we at around actually 9:30 in the morning, and then I drew this line in, and this was our target for the session. So we're looking for the target in the entire session based on the previous market profile level. So here's the HVA control point LVA. So today I'll mark this level, less so for today. So yesterday it was marked here going forward. So look what the market does to these levels. The market came up to it. We broke out. We had a buy signal. We had a liquidity grab buy, which I'll show you on the chart. It pulled in with the yellow trigger candle, and it ran up to the high of right at the control point. The control point was 6802.5. It ran right to it. We did a video on this yesterday. So if you want to play the video, I talked about these levels yesterday. Ran right to 02.5 and went right back down to the HVA to 93. So it fell 10 points and got rejected. Came up again, stopped to almost to the tick on it at 02.5 again, 6802.5. Once again fell, went all the way down to 92, fell almost 10 S&P points. Now, old resistance becomes new support on these market profile levels. So this is resistance. And this is how you find the wrongly positioned traders, because these buy stops will start cranking in. So that was resistance. Spell resistance, right? So this was resistance, and which becomes new support. So the market took off. It broke above the key high value area of the previous day, and then it came right down to it, and it found support right on it. You can see the resistance almost stopped right to the tick on that HVA. Old resistance now becomes a launching point for new support. This is where we had another liquidity grab buy, which I'll show you, and the market takes off from the 02.5 to 12, 10 S&P points. So rejected, fell 10 points, rejected, fell 10 points. We got a buy signal here, got a buy signal there. Then old support becomes new resistance on previous market profile. Remember, these are the previous market. These are all the participants in the market. So now old support now becomes new resistance. And it comes up to it, hits right on the PP, and there we go. Then we come over this morning, previous market profile. Once again, 1:30 in the morning, old resistance becomes new support. You get the idea. So these are key levels, market profile levels, every single week. These levels are key. You look at the previous market profile, and that will give us our support and resistance. Okay, so we're going to go over that here this morning. A beautiful day of trading yesterday based upon that. Let's take a look at the price action that we got yesterday. So I did a video on this yesterday on 8/7. So I'm not going to do it again. We had 1, 2, 3, 4, 5, 6, 7, 8 trades on the 7th. Let's take a look going into the 8th. 8th is more parabolic to the upside. We talked about this in the video yesterday, how the market was really moving to the upside. I talked about this price action, how we got inside, how they love to reverse inside these zones. Zone buy, zone buy, zone buy, zone buy. And then after the video, we did the video, it gave us another one. Time of day trade. I always talk about it since we opened the trading room. Time of day trade, 350. That's when they like to move the market the last 10 minutes before the New York closes. And sure enough, it came right down to my zone. This was a confluence trade because it went into my buy zone and also the trend zone. This was confluence. It hit both of them, gave a yellow trigger, and it rallied really hard. 801.5 to 12, another 10 S&P point move. Now we're in today's trading. Today's trading got rejected inside of the sell zone. The trend's still up. We're still green right here, so we're still up. We haven't broke market structure though. So here's a breaking point in the market. We talked about this in yesterday's video. I know the exact breaking point in the market this morning. It's going to be 93. This is the low of my zone. So as long as we hold above 93, the upside is intact. If we break 93, I showed you how we could trade it. We had a huge trade yesterday. You'll wait till it breaks, not a close below the structure. Wait till it breaks, and you get a liquidity grab that comes up and touches inside of the market structure and then closes back down. That was a trade at 78 3/4, and it just got cranked to the downside. 30 S&P points. So we'll look for that breaking point in the market. Will be 93 today. If it wants to continue to the upside, we're going to have to get a yellow trigger to pull us in and see if we can get moving to the upside. Okay, so that is our strategy for the day. We know our breaking point in the market is 93 to the downside. As long as we hold above market structure, our bias is up, waiting for some yellow trigger entries. Right, there's your zone. There's a breaking point, 93. Right there from the previous zone, proprietary zones we have. So we'll see if it can hold. If it not, 93. What you want to see is you want to see a break down through. If this market does start selling off, you'll start seeing it close below this breaking point. You'll want to see the market move up, give a liquidity grab, enter a bar like that, get inside of the zone, and then close right back down at the low, and that would be your entry at this level. Your stop would be just above the liquidity grab that got inside of market structure, which would be here, be your stop, entry, stop. And that's how we saw that 30-point S&P point move on the market that we did a video on yesterday. So these zones are critical. And that's what we'll watch again here this morning. All right, so I'll mark up the market profile zones. We'll get ready for today's trading. Hey, Steve, good morning. So we'll mark those up, get ready to go, and that's what we're looking for this morning in this morning's price action this morning. That's a critical level we're looking for right here, 93 break. If it breaks 93, we're looking to the market to go lower. As long as it stays above the buy zone, we should trend higher as far as that goes. So I'll mark up the previous market participants right now. You can see that if we break new highs, we're going to have to break out of 07. 07 would be the breakout. So we're going to move this up to the previous high will be the target. And then we're in new high structure, which would be 68, 12 1/4. And then we'll leave these guys up. If it does start breaking below 93, If it breaks below 93 today, here's our targets. There's your breaking point. The cool thing about the chart right now is 93 break would also be breaking below yesterday's market participation of high value area. That would provide a gap down to the control point at 82.5. So here's your levels. You got 93 break. If the market wants to sell off today, 93 is a critical level. Look for it to break. Look for the first liquidity grab to pull up and then pull back down to pull in. The target would be 82.75. First gap. Second gap is 70.5 on market profile. And then our third gap would be down to low value area structure. So those are the key levels. The reason we have this double top up here, if we do break above high value area, it got rejected this morning. We do break above 07. It looks like we're going to run up to possibly a double top. If it breaks a double top, you look for the same price pattern as yesterday. You look for a breakout there. If it's going to be strong, it would retest that double top. Old support becomes new resistance. And if we're going to set new highs in the market, that's what you would probably see to the upside. All right, if we break to the downside, 93 is our zone, and 93 is yesterday's high value area. This is not my opinion. It's not your opinion. This is actually market structure. This is all the market participation in the market with market profile. We're profiling the market. We're profiling where all the participation has been. And then we're looking for a reaction off those levels like yesterday. It caught it 1, 2, 3, 4 times in a row. So we'll see if we can get some same price action today. So the critical breaking point as of now, until market structure moves up. Now, if market structure moves up, then the line in the sand will be different. But right now, 93 support. 93 is critical support on market profile over here, and 93 support on our zone. As long as you hold above that, the bias is up. If we break it, the bias is going to switch to the downside. Hey, Thomas. All right, so let's get some ticks. I'll be in here all morning. Any questions, let me know.